Hello, everyone. Welcome back to the Trading Room. I'm Shane Vernier, and this is the Tuesday strategy session. Today has been all about metals. It's been all about metals. It's been silver. It's been gold. It's been a major correction. Had an absolutely amazing level come into play for silver. I threw that out on X earlier. Most of you probably missed it. If you're on X, check some of those ideas out over at ShaneV_Trader, and then also on our How to Trade feed there on X. But I got to tell you, I mean, this is a major correction. We talk a lot about retail traders typically taking it on the chin, Today, the retail longs are getting hurt very badly, and we're going to talk a little bit about the psychology of cutting off losing trades and understanding that no matter how much money you have, unless you're Soros or Warren Buffett or one of the big quantum fund people, Larry Fink, I have to tell you that you can't ride out a downturn like this. A single day right now, I'm watching spot silver trade off at about 7.25%. We were down over 8 earlier today. Gold's off about 5%. Is this normal? Is there any reason for this correction? And I would say that this is one of those things that I would call an occupational hazard. This is why we have stop losses, and this is why we don't let one trade, one position, one idea destroy our trading career. Being long in metals is the right thing to do, no question. Where you're long from makes a big difference. And I'm watching the tote board and I'm just sort of blown away. I haven't seen volatility like this in the commodities markets for a very, very long time. But remember, what goes up must come down. And typically when we come down, we wash out. For me, I wasn't really holding longs in either one of these positions. So my eyes lit up immediately. This is the pullback that we've been waiting for. It really is. So I'm giddy, and if you took a loss on gold or silver today, I'm confident it was a measured loss and you didn't lose the ranch. But remember, good trade location on a pullback like this can really set us up, and it can really set the table for some beautiful stuff. So we're going to hit gold and silver here relatively soon. I've got a litany of currency pairs that I want to hit: Euro USD, US dollar, Japanese yen, Great Britain pound, Aussie right off the bat. And then we're going to get into the deeper discussion on what we're trying to look at here for our metals markets, because those aren't going anywhere. This pullback is interesting. It's got me thinking, and there's a lot going on in the markets right now. So welcome back, everybody. If you have any questions at all, be sure to ask them today. It's a Tuesday strategy session. Yes, sir. Good to see you. Yes, sir. Welcome. Bible Tales for Kids. Hi, Shane. It's Bobby Bob. I love Psychology Day. Well, we're going to talk a little psychology, Bobby. If you have any questions at all, be sure to ask me, and I'm more than happy to answer. T. Marina, good to see you, T. I'm always welcome. Lead, a pleasure. Andrea Garwal, good to see you. Andrea and Tuku, good to see you guys over in the How to Trade community. Remember, you can join us in a lot of different places. X, LinkedIn, we're all over YouTube. You can hit us up here in the How to Trade trading room as well. It really is up to you. Switch Markets on YouTube is sort of where we'd like you to find us if you're going to find us on YouTube, but that's not a problem. You can pick us up on our feeds, and if we change our broadcast schedule, I'll be sure to tell you where you can find the live streams. We're going to dive into it, though, and I'm going to try to talk slower today, because this is one of those days where I could start talking really fast and lose everybody, because the action, it reminds me when I was a kid. It reminds me of 2011, back during the crude oil markets during Arab Spring, when we were seeing 7-9% moves each and every day for about a good month there, and you were getting limit downs and limit ups, and it was just a lot of fun. This right here, we don't see these moves like we're seeing at silver very often. So let me see. Antonio, Shane, Professor, do you take 920 questions today? Absolutely. We're going to actually look at the 920 for natural gas and outline maybe a potential entry point. I still love it to the long. We are pulling back just a little bit in gas today, but that shouldn't surprise anybody after the big move yesterday. Tina, good to see you. Tina, welcome. Dave F19, always a pleasure, guys. Everybody that joins every day. I'm confident that we're going to get something done really, really, I won't say special this week, but boy, I got a good feeling. I've got a good feeling. Ivy, hi, Shane. I've taken a long break from trading. Seems like I came back at a worse time for gold. You came back at the best time for gold, Ivy, and I'm going to explain why. And I'm not just saying, oh, it's a teaser. I'm not trying to tease anybody here. We've got some levels, and I think that we're going to be able to do some business. And I'm excited about that. I really am. All right. Okay, let's go ahead. Let's start off with our Forex pairs. These are the hot ones today. These are the ones that everybody seems to be trading. Let's start off with the Euro USD. Everybody's always trading the Euro USD, so this isn't a real big surprise to me. We got a bit of an echo here, I'm sure. All right, here we go. That should fix the problem. What I'm thinking here, as far as the Euro USD goes, is you're certainly pulling back a little bit on the U.S. dollar strength, at least over the past several days. Now, what we've had here is you could say it's sort of a decent trend that's begun, back in middle of September. Dollar's showing a little bit of strength, okay? And now we're starting to come off again, maybe form another leg down. We could almost put an Elliott wave count on that. I'm going to save that for another time because we have bigger fish to fry. But the level that I would be, that I'm curious about right here is this daily 78% level right here, this retracement right around, 115, 115.83, 115.85, somewhere down in there. That's a pretty good zone. So if we do, in fact, establish trade beneath 116 even, which really seems to be the downside support level everybody's bidding right now, I don't expect that to hold. I think we're going to come down a little bit lower. The 78% could be very good. This is a trade, though. This isn't a position. We're going to talk about positions when it comes to the metals markets. This would be a trade. So, I'm going to be looking at 115.89s probably. I'm looking for that bounce right back up over 116, maybe for 15 or 20 pips, something like that. Very conservative. I'm not convinced at all that we're even close to picking a direction on the Euro USD. I really am a believer that going against the US dollar is the way to play the rest of this year, but we've got to see more evidence. We're not seeing the evidence. The dollar's hanging in there against the majors right now. There's a lot of reasons for that. A lot of them are speculation, and we've got so many markets to hit. We're going to save those for another time. Unless you want to ask about them, then go ahead and ask. Dollar yen, I was asked earlier today. Gordon Williams wanted to look at the dollar yen. He goes, Shane, we got to look at the yen. And I said, yeah, we do. Right here, you get a good monthly chart, and you can see sort of the nice move up. This 62% right here, sort of an interesting zone. Now, a lot of folks look at what we do with Fibonacci's, and I've sort of given you my approach over the years. Most recent spike to spike, that's what I really like on short time frames, even on longer time frames. That really seems to help me. But remember, you can always go with what I call an important range. That's time-based, or it's this is a time-based range. Bottom line is this. So I go time-based or spike to spike and wave counts. We're going to leave wave counts for some other time because it's sort of, we have to talk a little bit about Elliott wave in that respect. But what we have here is really a beautiful time-based range. You've got your January 1st, and then we've just been bearish. And then what happened here, you sort of had that tariff panic of early April. We talk about it every day because it really was the biggest move of the year, pretty much across the markets. That was the biggest single sort of panic that we've had this year. And it's good not to have too many panics. We're seeing some of the metals markets right now, though. Nice big pullback, though. So what does that represent? Represents your yearly range. We've traded inside of January and April's range for the past 1, 2, 3, 4, 5, almost 6 months. So that tells us that our levels here on this Fibonacci retracement sequence, based on our yearly range to date, they're incredibly relevant and they're very important. So you got to sort of have an eye on them. Now, if you don't want to trade them, that's fine. We'll put trade ideas out and we can do all this stuff. But as far as the yen goes, so we got a macro level right there, 62%, right around 151.67. And remember, these things can be exact. If you're trading a 1-minute chart, they need to be very exact. If you're trading a monthly chart, you're probably going to have a little bit of leeway there. I would say probably 65 up to 75 is probably a pretty good resistance zone. And you've sort of seen the spike high this month. And now we're sort of pulling back. So when we look at something like the dollar yen, and I'm outlining my macro way forward, I love topside resistance up there at about 154, 154.50, somewhere in there. I really like it up there. I think that could be probably a great sell, 78%. But if you take that out, then we're probably going to go to new yearly highs. I don't believe the dollar's that strong, but I got to tell you, it's showing signs of life. Let's take this right down to a daily chart. Now you can see we had the nice big crisp rally, and then we pulled back down. And now this area sort of acting as what, really? Not much. I mean, it's not showing up as being, right here, you sort of figured, that's going to be an intermediate term top and maybe a big sell-off. But really, since this gap up and the strength that we've seen in this pair, this gap up that happened back in, the 6th of this month, we had a check of that 50% level. That's not an accident, 50% of the yearly range, and we didn't quite get into this gap zone. To me, it wasn't really a gap, but we'll just call it a gap up for the week because that's what it really was. But I wouldn't be trading it with my normal gap rules. Something like this, though, there's your big rally that you're having today. Where are we headed? We're trending up above that 151.67 area, probably looking to bid this market if I got an opportunity. So I'd go down to probably a 4-hour chart, and you can see right there what once was resistance is now support. Really just beautiful stuff. We broke clean. It's MT5 is a little bit clunky, but you can see that we broke clean above that level, and then we pulled back, and the bid stepped in and sort of took us deep. So I would be watching that 62% relatively closely. If you wanted to do a little multi-time frame analysis, something like this. This zone right in here, this 151.62, probably down to 151, 151.55. Remember, you don't have to be absolutely exact. We're not scalping a 30-second chart or a 1-minute chart, but we do need to know where the zones are. Likely support is right there. I like the bullish side of this market. I think that we're not going to argue with the U.S. dollar just yet. There's going to come a time when we will argue with it. We're going to talk interest rates here in just a few minutes as well. Important to know what's going on. Okay, Great Britain pound, Australian dollar. A lot of people are trading this right now. I understand why. We've got a fundamental coming out during the overnight. Great Britain, UK, I've been there. It's a fantastic country. UK CPI, actually I've been to England, I've been to London. But UK CPI is due out during the overnight. That's going to bring some participation and volatility to this market. I think it's going to be fantastic, fantastic stuff. So I'm watching this closely. You sort of have the CPI figure for Great Britain pound, and now the Australian dollar, who we really loved it to be a bullish type of a scenario. Now we're seeing a big time questions because those metals, the strength isn't really there right this second. So that's going to bring short-term volatility to the Aussie as well. This could be a one to trade, one to look at least going into the Wednesday session. Fibonacci retracements, I'm keeping it very simple with these Forex pairs to begin with. Nice spike low, nice spike high. This is a daily chart, so your pullback 50%. It's going to be right around there, 205.50, somewhere in there. I'm a big fan of golden zone trading. I'm not a big 50% trader, but somewhere down in here, you'll notice you sort of have a daily order block, in order blocks where all those orders seem to be located. You got the big rally and then sort of the tight inside candle, and then you sort of traded to the top side and then didn't really sustain that rally. This area right here is sort of interesting to me. Maybe 204, 205 even, probably 205 even. That'll be probably a decent bid. I mean, 62% right down there at about 204.75-ish, somewhere down there. So it's 205 to 204.75. I would be looking to get a support play going. Now, if you're short right now, that's fine. If you're long right now, that's fine. You can see we're sort of in a holding pattern. Just be ready for the Great Britain pound or the UK CPI numbers. We're going to talk about those in just a second. And remember, if you want to trade any of these ideas on the live market with real money, with real dollars and cents, with real pounds and pence, with real euros, I don't know what the denomination for euro change is, though. I don't know that. But if you're going to trade anything, really, you can head on over to Switch Markets. They're going to get you up and running. Reverse KYC program. That means they can get you up and trading almost immediately with upwards of 2,500. There's bonus stuff over there. Bonuses are going to vary just a little bit according to municipalities, so be sure to check your local listings or at least ask the live support team over there about the bonus that you're interested in before you get in there and start working. So lots going on, thousands of markets, zero commission accounts. They really do have it all, and we're adding a lot of features to the Switch Markets website, so definitely check that out as well. Let me see. Hello, Shane. What a day. Yeah, it's amazing. Davison Sopo. Shane, how's it going? I'm doing fairly well, Davison. I'm actually very, very giddy almost. Not like a schoolboy, but very giddy. I'm excited. I think that when we see these big moves, I get excited. That brings the trader in me out. A lot of days we just show up and sort of stare at the screen and sort of, this is boring. Not today. Today is not boring. Millions of dollars changed hands. People made fortunes and they lost fortunes. And I like the juice. I got to be honest with you. I like the action. I like the juice. If you don't like that, maybe you find a different thing to do. Everything we do, we have discipline. When we trade, we have discipline. We have good entries, good exits, great risk management. But there's no rule out there saying that you can't enjoy what you do. And if you like the action, there is nothing wrong with that, in my opinion. Now, of course, dopamine and some of the other hormones, you can't let those take over your brain, but you can definitely enjoy yourself. And I've been on the sidelines most of the day, but I'm enjoying myself, that's for sure. Joshua Chung, hello, Shane. Have a blessed day. I just landed. Well, no worries, Joshua. You're welcome. We're going to go ahead and sort of get into the guts of this live stream. I did want to get started with that, though. We've got really a lot of stuff to cover here. I want to go ahead and get started with a trade idea. Before we dive into the silver market, U.S. oil, this one right here, we're still looking at that low. We've got a bit of a bounce. I'm watching U.S. oil right now about 57.18. Don't be surprised if we go down and check out that 55 level. I can't say exactly when. If I knew that, I'd probably be in a mansion somewhere or on a yacht somewhere. But I think that we have a pretty good opportunity of trading 55 probably later this week. Remember, EIA crude oil inventories tomorrow. That's going to be big for this U.S. oil trade. I want to keep this front and center, though, because that's a pretty strong one. I'm very, very, very excited about that, the potential of that bid as well. As far as what we have right here, huge metal sell-off highlight Tuesday session. There's no question about it. Gold's in a free fall right now. You're off about 5.5%. Silver's starting to push lows again, down about 7.5% on the day. Those are epic reversals. So the first thing that immediately came to mind, I got up pretty early and I took a look at my screen, and clearly things got ugly for the metals markets during the overnight session when a lot of you probably were getting out of bed, especially if you're in the UK. You're getting in there and you're getting started with your day. That's really when the carnage started for metals. And so when I got in front of the screen, I said, "Whoa, this is fascinating." My eyes lit up because we've wanted to buy a retracement in metals for so long. for so long, and we haven't got a good one. We've had some 4-hour retracements that were tricky and daily retracements that are tricky, but when we have an opportunity maybe to catch a weekly level, I mean, my eyes absolutely lit up because I think we have a fantastic opportunity down here. 39.71. Now that we've got a couple of barriers to entry here, and I want to go over this very, very closely. Now, listen, if you can certainly wait for a pullback to 38% and go long from there. I don't have a problem with that. I think that's probably the strongest gold trade on the board right now, and we're not that far from it. We're going to go to the shorter time frames here in a second. What's our weekly range? Weekly, we're off about 3%. Okay, something like that. So today's loss is not horrible, but a complete reversal over the past 48 hours. That level right there could be one that we're looking at for a while. We have an opportunity potentially, maybe the weekly high is in. We've got CPI coming later in the week. I think we're going to have an opportunity to trade this thing, and I'm excited for it. 39.71. So we've got our entry points going to be somewhere up around 77.50. That's where I put it. I wanted to be sure that I was aggressive. But here's the conundrum, and here's a really, really tough thing that we always have to deal with as traders. Okay, we've got a key level there. There's no doubt in my mind that 4,000 is going to draw bidders. None. When we get a pullback right around 4,000, we're going to draw bidders. Now, the question is do they hold? Can they defend 4,000? Is it just a real short-term bump, and then we continue down before we base out? I could definitely see this market basing out somewhere around our 38% level. We could definitely wash 4,000 out, wash a lot of the retail longs that are still holding on from up here, and then look to maybe get long with a position. That's sort of what I'm thinking. You say, Shane, what do you scalp your one-to-one ratios, your tight risk management. You want to always make sure that you're covered. You like to be conservative with your profit targets. You don't take positions because you don't like sticking your neck out there. And I don't. I don't believe that you have to be right about much of anything to make money trading. That sounds like the stupidest thing you've ever heard. You do not have to be right. Believe me, it's true. You don't have to be right. You just have to be patient. Be patient. I had a trader here, a veteran trader on how to trade, sent me some great videos a day or two ago about being patient. Old Jesse Livermore quotes, and Jesse Livermore was reminiscent of a stock operator. That goes back to the early 1900s when they were reading ticker tape. But even back then, they knew that, hey, being patient is what it's all about. If you're patient and you hit your trade locations, you do not have to be correct. You don't have to know where the market's going. You just don't have to. You could say, okay, well, I bought gold at a discount. We know that the trend's up, the long-term trend's up, the intermediate-term trend's up. All the underpinnings of the market say we're going higher. It'd be hard to lose money buying down there. It really would be. The only way that you could really lose money is buying 39.75s, thinking that we're going to go to 5,000 or 10,000 and just holding, and then getting stopped out of a trade when that vibration gets a little bit tough, when the market dynamic, short-term sentiment changes. We call that noise, getting stopped out when we should still be in the market. So I don't stick my head out there very long. I think that you could get an intermediate term low right there, meaning if we get a shot at this area this week, potentially going into November, you may have called. You really may have called it like a 3-month low. It is possible. It really is possible. So I'm watching that closely. I think that may be one of those 90-day trades that people just take and they go, yeah, I think we may get a shot at 5,000 from there potentially. Personally, that's not my style. I like to just nail that entry, get in and get out. In this trade right here, you can see at the trade idea, it's worth about 3,400 pips, something like that. I mean, you can see the spread right now on this spot gold is just, it's all over the place, everywhere from 110 pips to 50 pips to 60 pips. You got to be very careful doing this on the spot market. So be sure that you reduce your leverage if you're going to trade right now. Extremely volatile. Spreads are all over the place. Reduce your leverage. These types of trades that are, big profit targets, big stop losses, you're probably going to be, I always say 1 to 3 to 5%. I mean, if you take a 5% trade with that big of a stop loss, you're going for it. So definitely take a look at our trade idea. I typically design those with sort of a 1-to-1 idea involved here. So like if we're going for, say, I believe the profit target is back up at 4,016, something like that. So you're looking at $30-something, I think, was the approach, or excuse me, the profit target, the next level. So $30-something beneath. Basically, your stop loss can be somewhere beneath 39.50. I would watch it manually And if it breaks clean through 39.50, then you kind of got to run for the hills. But if it's sort of slow and stagnant and you get a bounce off of 39.50, then you may be able to stick and wait and see what happens. That's a big one. That's a big one. I've been waiting for that one for a long time. Now, whether it works or not, we don't know. I know that over time, those types of trades do work. So if you're looking at, taking 10 of these big pullbacks and then getting in on it, you're probably, I got to watch what I say. I can't really say that, but I will say that you're going to win more than 6 of them. I can tell you that. So that's what you're looking at there. Let me see. Mullet, will we talk about the SPY? Yeah, we can get on over to the SPY as well. I'll definitely want to check in on that. Remind me if I forget about it by the end of the stream. But we do have some other stuff. This is really the one, though. This is the one we had out on X earlier, and this is beautiful stuff. This is a weekly chart. This is exactly what we're looking for out of gold. There was a lot of bidders in silver. There was a lot of bidders right there at 47.81 to really put a Band-Aid on what was an absolute free fall today. This is the weekly chart. You're off about 6.75%. That area right there was absolutely fabulous. So let's go down to the 30-minute chart, and you see exactly what happened. It just doesn't get any better than that. You go right down there, you hit it, you hit that 38% on the weekly chart, and then you get the bounce. Now you're starting to come back down. Is that worth a secondary buy? I think you could probably scalp it, but here's where you have to be careful. You're fighting a very, very stiff downtrend here in silver. If you when you wipe out that daily low, if you hit that right beneath 38%, you're going to crash. You're going to keep going because listen, right now there's a major commitment here, and you can see it by the volumes in the market. Now, these are spot volumes, so don't get too carried away by thinking they're gospel, but okay, we know that a tremendous amount of action came in right over this 90-minute period. Now, there was a lot of selling here. There was still net selling here. Take a look at this. The red down here means what? Your volume, you had net selling. That's right on our test. But as soon as that resided, what happened? Volume started dropping off a little bit. Couple positive candles. That's very common around key levels. Big time retracement zones, big round numbers. You'll see everything spike to drive the number to that zone. And then what happens? Everybody wants to, okay, let's just wait and see what happens. The longs are still holding their longs, and the shorts don't really want to fight with that level just yet again. So what's likely to happen under here? You're likely to see some more red. I mean, I could change my, I can almost predict this, but let's go ahead and just change this to a red so I can sort of get the point across. What do you think is likely to happen if we take out this low in the next 90 minutes? You're probably going to see some of this stuff. You're probably going to see elevated volumes and a couple of big red candles. Watching silver closely. Would you want to be long or short right now? From this area, I probably would want to be long. Even though you're fighting a vicious trend, a wicked trend, at least I know where I have to get out at, and it's right beneath the daily low. So that's a 30-minute chart. That's a little bit of an intraday look. It's sort of my playbook going deeper into this session with silver. We should see the volumes really dry up for the rest of the day. I mean, the hot and heavy stuff should be about done. But if you wash out that low late in the day, late in the session, boom, boom, shakalaka. We could go very, very low very, very quickly. So I definitely want to stress that. Let me see. Ahmed, Japanese, let's see. Nikkei 225, absolutely. So we'll go SPY and Nikkei. Any other questions? Any other markets at all? I'm more than happy to cover those. As far as what are we looking at here? This one I definitely wanted to show you. That this is a good look at the 920 trade that we had on natural gas that developed yesterday. Just a gap up, an absolute freight train gap up. The trades here are very simple. This is a daily chart, so this would be a swing trade. You're looking at when the 9 EMA crosses over the 20 EMA, you're going to get that big gold bar. This is our coded 920 strategy. Check out the YouTube video over on how to trade calm. And you can certainly get the entire tutorial. Those of you that join the streams every day, and there's a lot of you out there, and I really do appreciate it. I really do. If you guys need anything special, you can be sure to reach out to me over at How to Trade, and I will answer any question you want. It's my pleasure. I'm leaning more and more on the 920 these days. Been doing some back testing, been doing some looking. I don't really believe a whole heck of a lot in back testing. You need to do it to figure out what your strategy does, how it functions. But, I don't necessarily rely on the predictive value of back testing because it's questionable. It's very debatable whether it works or not. But what it does do is it gives us tendencies, and it shows us areas. Okay, this is an area where this strategy functions well, or this is an area where this strategy doesn't do so great. And it's very easy to cherry pick these trades. I mean, I could throw the 920 on all of these assets over here and just show you winning trades. We can do that. What's important, especially with a crossover strategy, is that you understand when to take it and when not to. Now, when we see the volatility heat up and the distance really between these, the moving averages sort of expand, that means that you've got a pretty good shot at a winning trade. Now, when you see the moving average is really tight, like you see right here, really tight, you get into what I call a weave formation. And what that means is typically you're going to have smaller daily ranges and you're going to have a real tight area between the 9 and the 20. And what that's going to cause, and you can see it right here on your chart, is frequent crossovers. Boom, boom, boom. And what does that mean? It means losing trades. It means there's a loser and there's a loser. This one right here, a loser too. Even though you opened up a little bit, at least there you got a decent bullish move. Now what are we talking about? Well, we got the big move up, the change in the fundamentals, the EU basically saying we're done with Russian natural gas in 2 years. You know, I'm not going to be critical of their policy, but I'll believe that when I see it. They're giving themselves 2 years maybe to find alternate energy sources. It's just a buffer, guys. I mean, they may be weaning off of Russian imports of natural gas, but when you have to have it, you have to have it. That's just sort of the way it is. So this right here is fascinating to me. This is a great 920 trade that I really think that you're going to go up and test the June's highs. What is that going to be, your 6-month highs or so, right around 4035. Now, what I did want to show you is something I didn't yesterday on the natural gas, or I may have. It was something like this. So Russia-Ukraine, there's the top of the Russia-Ukraine, and there was just sort of the bottoms down around 150. I mean, remember, we thought that everybody was pretty much going to put their back against two even, and that washed down right down to 150, and now you sort of bounced up, and we hit our 38% perfect. I got a hunch that we're going back to 38%, but I think a more conservative view of this market gives you June's high, and there's still some decent money there. So if you're a natural gas trader, take what I said with a grain of salt. If you're a profitable one, if you like natural gas, but you're sort of struggling getting some consistency, this is a fascinating trade. This is fascinating to me. We're up again today after the big move yesterday. Does this market ever pull back, or do we run to June's high? I got a hunch that we may just run to June's high. So you got to do what you got to do as a trader. Still a lot of meat on the bone, though. If you just drag down, just real quick, guys, and then we'll get on to the markets you want to look at and some of our fundamentals. Even if your target is somewhere up here in June's high and your stop loss is conventional beneath that swing low, I mean, you're still looking at better than an even money risk versus reward. That's pretty good. That's pretty good. Now, if you want it to be a little bit tighter and stingy, I don't really have a problem with doing this. You're above sort of this big move up, or excuse me, you're beneath Monday's low, which is going to be a big technical area. If we reverse past that, then you're probably going to go down and wipe out that swing low beneath 3 and then get momentum down there. So if you can move that up, you can make your R&R 2 to or 1 to 2, 2 to 1. 2 to 1 payoff, 1 to 2 risk versus reward. I don't know. I'm watching that closely. I mean, the safer thing to do is probably just to assign the larger stop loss. But is the move possible up to 4? Absolutely. Fall winter seasonality, bullish. Also, you're seeing all the grumbling out of the AI sector. That's bullish for natural gas. You got to have energy to power these AI data centers, right? Natural gas is supposed to be a big part of that. Nuclear will come online and take care of most of it. In the short run, natural gas is there's a lot of pressure on natural gas for electricity. So this is fascinating stuff. I'm watching this. Gas has been sort of my nemesis over the years, natural gas. I don't scalp it and I don't intraday trade it. But a position like this looks to me to be pretty good. And we have a lot of prima facie evidence that gives us a way into this market long with good risk parameters. Maybe a shot at the 1 to 2 risk versus reward there. Could be pretty good. So we're going to watch that relatively closely. Let me see. Lebo, good day. Let me see. Good day once again. Yeah, I'm happy. We're above ground. We feel pretty good about it. Let me see. Antonio. Good to see Antonio. How do we get a hold of you on how to trade? Sorry, I know you've answered this previously. Yeah, I get this question a lot. The best thing to do is you go over to how to trade. You create your account. You log in. And what you're going to do is send me a private message. So there's a couple of ways to do that. I could probably just show you. But so over to how to trade, you just go up and click on my picture. That's what you would do. Just go ahead and give it a click. And then once you click on my profile, then you'll have the ability to send me a message. There should be a little message prompt there. I think that'll pretty much get you there. So you can send me one, and I'm more than happy to reply. I try to get back to you guys in short order. It's just a lot of times get real busy during the day, and it may have to wait a few hours. Or if it's on the weekend, it's probably going to wait till Monday. That's for sure. All right, and with the time zones, I know it's a challenge. So that's a good look at our gold and silver markets. As far as week 43, it's quiet today. That's why we're doing a strategy session. Wednesday, EIA crude oil inventories. It's going to move the crude oil market. I think we could get our run at 55 then. I think that's a big level. Thursday, weekly jobless claims, maybe being released. We're not necessarily certain yet. U.S. government shutdown, still the big news. We're going to cover our news here in a second, but U.S. CPI is the red letter event for this week. That's Friday. 10 minutes before the release, 6:20 a.m. my time, 8:20 a.m. Eastern. Be sure to tune in. We'll have all the action for you live. It's an early morning for me, but it should be a lot of fun. I can't wait to see these numbers. This is going to shake the markets up big, and I think it ought to be a lot of fun, so be sure to join us then. We'll have some key levels, some analysis. We'll talk CPI and exactly what it is and why it's important. News of the day, well, this is basically it. This is all I could find was Canadian CPI, and then remember, each country sort of figures out CPI a little bit different. It figures it out a little bit different, so I wouldn't stress too much if you don't understand the difference between Canadian CPI and the United States. We're not economists, we're traders. So that right there, you can see all these different variations of CPI, common CPI, median CPI, trimmed CPI. I genuinely don't know what they are. Median CPI, I guess that's some sort of average or mean value of what? I don't know. Something like this, though, the CPI level, we really expected it to go down. The previous month was negative 0.1%. We were expecting negative 0.1%, and we got 0.1. That's interesting to me because what you've had here is sort of a downturn in energy prices. And as those energy prices come down, especially crude oil, when we're talking about going down from the 60s and trading down to the mid-50s somewhere, that's a significant drop in crude oil prices. That should take the pressure off of CPI, and it did not. So I'm watching that closely up in Canada. I think that's an interesting one. And if you're trading the loonie today, you probably got a little bit of action on that. We can go ahead and look at the loonie here relatively quickly, just with regards to our daily 920. But something like this, you can see there's your bullish trend. There's your breakout right there back on the 23rd of September, and it's just been an absolutely great trade. You'll notice one thing that I do want to stress is this is sort of the weave formation that I just talked about. There's a sell that's a loser. There's a buy that did okay, but really wasn't what we were looking for. There's another sell that's a loser. And this moving average, boy, when they flatten out and you get the frequent crossovers, it's trouble. What happened in early September, though? Labor Day. That right there? Labor Day. There was very little volume in the market right there. And then you started to see volume sort of flatline. And now we see business picking up. And what do you have? There's your signal, and this essentially is what you're looking for. You're looking for a break, those moving averages to widen out, and you can start to see the volumes creep in. This was a nice big green candle there. This is fascinating to me, though, sort of flatlining right on that 9. Interesting stuff. I think it's you're still in great shape. If you're long from down here, you're still in pretty good shape. But did we get any huge action today at a CPI? No, we didn't. But you'll notice that the daily price bar traded both sides of the previous day. So that's a signal of indecision. It's not necessarily a doji. It's really not a doji. I see these types of things where we trade, I guess you'd call it an engulfing pattern, an engulfing bar, where you trade both sides of the previous candle. I always say that's extreme indecision unless we just see a head fake beneath or maybe above and then a big negative, or below and then a big positive. But we're not seeing that. We are sort of settling into maybe a doji for the day. And when you trade both sides of the previous day's range and end in the middle, that means nobody knows what the heck's going on. And your CPI figure probably had a lot to do with that. So definitely keep an eye on those types of formations if you're interested in patterns, chart patterns, things like that. Okay, what's going on in the news? Not much. I mean, honestly, there's the government shutdown is dominating sentiment right now. Will the government reopen today? There's another vote. Yesterday, I believe they failed for the 11th or 12th or 13th time. We really don't know when the government's going to reopen. We know that if this keeps happening, Trump's approval edges up. If it keeps going up during the shutdown, then the Democrats are probably going to fire the government back up. I would think this whole thing's just a political ruse, in my opinion. What has the government really, what does it mean for us long term? A lot of people are worried about economic downturns and unemployment. Our unemployment numbers are going to look horrible because people are losing their jobs because of this shutdown, and we've got to be very, very careful with what we think about the unemployment numbers when they do drop. They're going to be, there should be dreadful. This should be dreadful. So 8 days to our Fed watch, and that's going to be, a week from tomorrow. We'll have all the FOMC live stuff for you. But you can see we're pricing in a rate cut there to 3.75%, and that's what we're looking to do there. December, sort of the big one we've been looking at all year long. We're thinking that we're going to get another rate cut. We've got about a 94.7% chance that we do get that second consecutive 25 basis point, and then we're already pricing maybe a half a point. So, the interest rate expectations are sort of 6 of one, half a dozen of the other. I wouldn't really worry too much about what happens. I believe that we're going to price in, or we're aggressively pricing back-to-back rate cuts. Will they come to pass? I really don't know. All right, let's see. We got some good questions here. I'm going to talk about the SPY, the Nikkei. We're going to look at two stocks real quick, and then we'll get to those and probably sign off. I got a good question here. Let me see. Lebo, Bitcoin to me is extremely unstable. I see that it's gone below 112,000. Do you think Bitcoin will recover, and will the decline continue? Yeah, we'll look at Bitcoin as well. I'll give you some thoughts. I've been all over Bitcoin. I think that Bitcoin is probably giving us an opportunity to bid, just like you're seeing out of gold and silver. Absolutely. And what is a God candle? A God candle. I mean, I should know this. I don't know it. There's only a couple rules on this stream, Lebo. If it makes money, it's the right answer. Asking questions is cheaper than losing money. And if I don't know, I'm not going to sit here and BS you or lie to you. I don't know. I don't know what a God candle is. I've heard it. I've heard the phrase. I just don't know what it is. Maybe a quick Google, maybe some AI help, maybe some ChatGPT, give you a chance, see what a God candle is. All right, guys, let's get into a few of these markets and we'll call it a day. Any more questions, feel free to ask. S&P, Nikkei, Bitcoin. I can do that. Let's start with Tesla, though. Right here, you see Tesla, all-time highs. Be ready, be ready, be ready. We've got the earnings. The earnings report's going to drop tomorrow. Definitely be ready for some serious volatility. That will spill over into the indices. So if you're watching Tesla stock, all-time highs up at 488.54. A lot of folks are saying bet the ranch. We should see something like 600. I have no idea. If you're going to trade any of these stocks, beware of the earnings reports. That's a big deal for this week. There's a lot of them out. Today's going to be Netflix. Netflix is coming out with their earnings after the bell, I do believe, or maybe later this afternoon. I'm not sure. I believe it's after the bell, though. All-time highs at 1341.15. Be ready. That's a double top. Those are sort of a monthly double top. Yearly highs, all-time highs. If you're trading Netflix, you're right in that neighborhood. Interesting stuff. If you look at the earnings for Netflix, their overhead is absolutely huge, but your estimate is about $696. And your revenue, you're looking for about $11.51 billion. So if you're looking at your earnings per share, your EPS is going to be $6.96. That's healthy. We'll see what happens if we see an upside or a downside miss. Just be ready for volatility. I mean, it's going to be absolutely huge, and that one drops today. Be very, very careful, and that's after the market close right there. Netflix, definitely going to be in play. All right, let's take a look at a few of these markets. SPY was the first one up. The ETF Trust, the Spider. We'll go ahead and look at this. Is the S&P 500, I do believe, but we'll go ahead and look at some. We'll look at the CFD here in a second, or maybe some futures. But 920 EMA, you can see where the bid was, and all that's fantastic. Let's go over here and I'll give you my opinion. All right, 30-minute chart, nice big gap up. It's not a gap up, but it's definitely a move higher on the session. There's a daily. Okay, so the first thing that I would say is, don't use your highlighter for that, Shane. Okay, the first thing that I would say on this one is, Mullet, if you're looking at the SPY, know where your all-time highs are. That's huge. Now, it looks to me like this is just an ETF, so 630, 673, whatever. So what are we trading? The US 500 is about 6,700. So it's trying to track the index. I understand that. There's probably a little bit of a tracking error there, though. We're really very close to your all-time highs. And the biggest thing to remember is we just traded these not too long ago, big correction on the tariff talk, and then sort of a rebound. And now we're pushing all-time highs again. So the way that I sort of approached the S&P 500 and the NASDAQ and the Dow is I'm just looking for key numbers. I'm just looking for big round numbers. So to me, what would we say probably dug in right there at 675? That probably would be the key number. I believe those sellers are probably already gone. They protected that level. This next trip up, more than likely, you're going to break through that level and head higher. So in my view, the next one is probably going to be somewhere up around 700. that's probably where you're going to be on the doorstep of at some point. Now, how fast do you get there? It's going to be a lot slower than, say, that silver market. You still have to move quite a ways just by the way that the S&P 500 is priced. So if you're looking at something like this, I would say that this area, there's a lot of folks that potentially are going to be playing shorts off of that high. But I would wait for the break above 67. 67, not 67.50, 675. I would wait for the break above 675, and then we're looking to buy pullbacks. So it's relatively straightforward there. You can see nice move higher here to open the trading week. One thing that we definitely could do is if we do get that rally, maybe looking to do something like this. I would love to buy 675s, but we got to see price get established above that level first. If we don't get that, we could definitely get hurt. So I would watch maybe a little compression in this zone, but once this area breaks, we're moving higher. Okay, now NASDAQ, let's see. The Nikkei. Nikkei is one of my favorites. Realistically, I used to really love monitoring the Nikkei. I haven't traded it or really looked at it much. We know that the trend's higher. And when we talk about big round numbers and key levels, you got to be sort of hip to these levels. And if you're not in trending markets, you're probably going to make some mistakes. And they may not cost you money, but you don't want to run into resistance where, it's not warranted. So right there, you have a 50,000 level, which is huge. So what do you have really earlier today? 49,965. So I would be looking at 50,000 relatively closely. That's probably top side resistance. It's already held up once. Do you want to get involved? Maybe sell right in front of 50,000 potentially. Let's go down to the short-term time frames here. Take this down to, say, a 30-minute chart. So sort of there's the action, and that's right around my time. That's going to be right a little bit into the Asia Open. So right there is going to be your Tokyo Open, and then sort of probably your mid-session maybe. And then what do you get? You get the sellers to protect it. And now there's more volume sort of since the U.S. Open, and now it's tapering off. So you're getting some compression right in front of 50,000. I think that's probably going to be a pretty good area to sell, though. If you're in an area maybe right after the Tokyo Open, you could take a shot to the downside on that, selling from right up there around 50. But remember, the rules of these key levels apply. The more that these zones get hit, the more that it gets tested, the less efficacy that level will have, and eventually you will break high. And once we break high, then the game becomes really easy. Then we're just waiting for a top to set up, nice swing low, and then we're just looking to buy the retracement zones, preferably above 50,000. So, it's a great level. It doesn't get any better than 50,000 in the Nikkei, does it? That's a lot of fun. You can see where everybody's trading it. A lot of money flying around, guys. A lot of money. Now, what's the difference between a trader that is struggling and a trader that's hit these key levels and is doing it with a little bit of size? The biggest thing is patience. The single biggest thing is patience, waiting for 50,000. There was a lot of traders down here probably didn't want to wait. And they tried shorting this all the way up, going, okay, I'm shorting 45, I'm shorting 47.50, trying to pick the top. Can't really do that. We can't even really try to pick a top from 50,000. Odds are that level is going to get washed out if in fact we're going to see a reversal. You're probably going to wash 50 out first, knock out all the retail shorts before heading downside. So I'd be watching that closely. To me, it's a great scalp. As far as the position goes, we'd need to see maybe a month, maybe a doji month, or maybe an inverted hammer. That would be beautiful up there on, say, a monthly or a weekly. Then we could take a shot to the downside in a position. But for right now, what could you really say about it? The trend is up. There's no question about it. Let's go down to the daily. Maybe we can get a buy going. Do you want to follow the trend? I don't really have a problem with it. I really don't. You just got to be aware of 50,000 up there. The other thing you could do is just go Fibonacci from that spike low. Somewhere up there, maybe 48,815, something like that. That could be pretty good as well. It's not bad. All right, Bitcoin. We'll do Bitcoin. We got a couple questions here, and let's see. Should we do Bitcoin first or answer the questions? Let's do Bitcoin, then we'll answer the questions. It's pretty good stuff right here. Just judging by where our macro line in the sand is. It looks to me like it worked pretty well. Let's go down to the monthly. So what do you have here? A tremendous uptrend, no question. We could do the Elliott wave stuff if you want. The way that I do it is very basic, and what we're doing here is we're just looking for a move. And remember, 1s, 3s, and 5s move, 2s and 4s pull back. There's your 1, there's a 2, there's a 3, there's a 4, there's a 5. Now the question is this 5 going to extend? Is the 5 over? Is this considered a pullback? To me, it's a flat line. To me, it's an absolute flat line. I don't see the big pullback. See these pullbacks? We sort of trickled down a little bit lower for months. There's your move. There's your breakout move. That's a pullback right there. A couple of negative months in a row right there off of a nice swing high. There's sort of a pullback. That's a rally. Is this a pullback just yet? I don't believe so. I think we still have a possibility to move higher on this wave. So once 3s and 5s move, right now we're in a 5. So if a 5 is going to be a mover and a shaker, I want to be long. I still am incredibly bullish. This right here is a function of your tariff talk. The debate between China and the United States over chips and rare earth minerals is definitely shaking crypto, no question. So, over the years, we always said what impacts crypto pricing? Regulation is absolutely huge, and mainstream adoption. Those two things have really been the keys to crypto. Now we have to start talking about the infrastructure. We've got to start talking about rare earth minerals, chips. Where's the tech going to come from? How does AI play into all this? Extremely complex environment. But what's happened? AI, we know, is everybody's throwing all their weight behind it for right or wrong, whatever you think of it. The investiture is there, and they're going to try to grow that industry as fast as they can. Okay, that's bullish for crypto. Number 2, the United States government right now under Trump, they want to become the crypto capital of the world. That's incredibly bullish for crypto. That's number 2. So regulations, probably not going to be a factor, at least here in the United States. And then number 3, what can we say? What can we really, really say about the potential mainstream adoption of crypto? I mean, we're already seeing banks jump into crypto custodialship. Crypto custodialship? I don't know that word. Like I said, I'm a trader. I'm not an English professor, but as far as all the underpinnings say we're going higher. So this pullback right here to 38% was a great opportunity to get long. We had a trade idea out. You could have got stopped out on that one, though. That was pretty hairy. If you were buying it on the cash market, though, it was an easy buy and hold. If it was a derivatives play, that's much harder because you're leveraged. But if it was a cash market, buy and hold, ooh, that was a pretty good trade. As far as what we could say about the dailies right now, I mean, the dailies just sort of show it all. Right there was your level. There was your hit. Boom. Could not establish trade down there. Broke right back up above it. Ground higher accumulated over 4 days. So what did you have right here? Notice our volumes are increasing, right? As the sell-off develops, the big volume, we challenge that level, big volumes. And then look, what happens? The volume dies down. Now it's growing again. The volume's starting to grow, but in a bullish fashion. That's what we would call accumulation. It's pretty good stuff, really. I mean, it's a hell of a bullish trade. So I'm bullish Bitcoin. I don't really see much problem with it at all. I see a tremendous top side. We were fairly accurate on the top side call of 125. I'm still formulating what I think 2026 is going to bring for crypto and Bitcoin in particular. But for me, it's not really a question of 125 anymore. It's more of a question of 150, 175, or 200. But that's easy to say when if you get overextended and all your money's in crypto. And you're like, okay, Shane, well, when's it going to get there? And that I can't tell you because I just don't know. So I hope that helps, Lebo. Let's see. Antonio, I often use the 920 on the 30-minute chart. When the breakout candle closes high above the 9 EMA, I sometimes fail in calculating properly the retracement point of entry. Suggestion, please. Yeah, we'll look at that one. Bill R., gold is setting up. Let me see. What about IBIT? I don't know. I'll have to look at IBIT. Okay, we'll cover those questions. I'll show you here in a second, Antonio, what I would do to the retracements. I'll give you a couple entry ideas for the 920. I think they're pretty important. They're very easy, though. They're not hard. And then I'll look at IBIT. Bill, absolutely. Lebo, is there a way to place the perfect stop loss in the event there's a temporary reversal before the trade shoots up? No, there's no such thing as a perfect stop loss. There really isn't. If you're going to be a trader, you kind of have to be arrogant in a lot of ways. I try to keep my own ego and things out of these streams. I really do. Sometimes some of the things I say come across as being like, oh, yeah, he's really cocky. I'm not really. I've been not humiliated, but I've been checked so many times in losing trades that I have a pretty good idea of what I'm dealing with. For me, I know my tendencies. Things go really well for a long time, and then they sort of get rough, and then they pick back up again. But your stop losses, if you're going to take pride in any one thing you do well, setting your stop loss should be it. And for me, I show you guys exactly where we put the stop losses in on the trade ideas and all of that stuff. As far as my own personal trading, I'm more of a mental stop loss person, especially if I'm in front of the computer. I don't necessarily like having my order in there just in case things get touchy down around my stop loss and it gets hit and then it bounces way up. I don't like doing that, but if I'm not in front of the computer, then I have to have orders in the queue. Or if we're trading like a CPI or an NFP, you have to have orders in the queue so you make sure that you cut that thing off and get out. Now, your stop loss location, there is no perfect one, but be smart about what you do. So that you can place stop losses in a million different ways. You can use market structure, which is what a lot of people do, most people do. You can use finite pip counts, finite tick counts. That's cool too. For the longest time when I was trading crude oil futures, I used an 8-tick stop loss no matter what. Didn't care what the trade was. It was 8 ticks. I was 8 to an 8. Okay. I found that it's not that easy. Usually you have to set a stop loss that reflects what's happening in the market. So let's say I use an 8-tick stop loss for a crude oil trade that's based on sort of a 30-minute chart with the ebbs and flows of the market, and my ranges are like 70 or 80 ticks, really volatile period. My 8 ticks doesn't mean anything. So that's a great question. There is no real way to set a perfect stop loss. There really isn't. You've got to set one that works for your profitability. So when we set them, it's typically a 1-to-1. I feel pretty good about them. I like my stop loss to mean something, though. It's got to be a hard out. When that thing gets hit, I need to know that I'm wrong. There's nothing worse than getting your stop loss hit and then bounces back. Well, I don't really know I'm wrong. It's hard. That's a hard question. It really depends on the trade and what you're trying to get accomplished. All right, let me see. Let's go to Antonio on the 920. Because it's a good question. It's a real good one. Okay, the question is, I often use the 920 on the 30-minute chart. So let's take this down to a 30-minute. We're probably going to need something different than the dollar CAD. Let's do this. This has got to be it. All right, here's a 30-minute chart on the gold. All right. So this is your 920. See if we can find a good. You know what? I had a better example. Let's go to natural gas. This is easier to do, like in the moment. Let's go to our daily on natural gas. Okay, there's your 920 natural gas market. Is there a way to place the perfect stop loss in the event there's a temporary? Okay, I already covered that one. The question is, I often use the 920 on the 30-minute chart. When the breakout candle closes high above the 9 EMA, I sometimes fail in calculating properly the retracement point of entry. Suggestion. It's very simple. You have a couple of options no matter what. Number one, you can wait for price to pull back to that 9 EMA. You can do that. That's not a problem. You can wait for it to come back to that 9 EMA and then take the trade. Especially on a 30-minute chart, I really don't have a problem with that. I mean, that's just up to you if you want to be patient and do that. As far as retracements, let's say right here you opened high. Okay, and we can't really ignore that candle, but let's say you opened high right here. Off of this low, the previous sort of the swing low, that spike low, that would be where I would build my retracements from. So if I was looking to get in on a retracement level, something like that, right? Pretty easy. The beauty of this is you're still not out of this trade. So like, let's say we haven't got in yet. We're waiting for that retracement. It hasn't developed yet. Go right up there. Spike low, top side. There's your pullback. So you've got a 9 EMA down here at 50. You've got a 38% buy at 33.17. Pretty good stuff. You got a deep retracement down here at 302. Could be a great trade. The only risk you run waiting for these things to pull back is you may not get it. So that's what I would be looking for. One last way that I will show you this, but I sort of bite my tongue doing it because I've had mixed success with it over the years, is to actually attack the range. Especially on a daily chart, you could do something like this, saying, okay, there's my daily low, there's my high of my trigger bar, and I want to get that pullback down here into 38% or 62% just to try to improve my entry a little bit better. You could do that, and you're going to get in on a lot more trades. It doesn't give you the great big discount and the edge the other ones do. No, it doesn't. But it's not necessarily a bad way to do it either. It's relatively straightforward. You just got to be patient and wait. Okay, let me see. Dave F19. All right, thank you for the God candle. A God candle is slang for a huge, sudden, and powerful bullish candle that appears on a chart. usually on higher time frames, and pushes the price up dramatically in a short amount of time, courtesy of ChatGPT. All right. The God candle. That's a bit dramatic, isn't it? They ought to call it the Kingmaker or the Queenmaker candle, right? Make you rich quick. All right, let's look at IBIT, and then I'm going to have to get going here. IBIT. The iShares Bitcoin Trust ETF. Okay, so if we're looking at Bitcoin, I'm still going to be relatively bullish. The problem I have with these ETFs, Bill, to be honest with you, folks make a lot of money off them. Most of it's when they trade options on the ETFs. As far as I'm concerned, this would be a challenging way for me to trade Bitcoin, just because I understand why people would do it, and you would buy this just to get exposure to the Bitcoin market. Let's go ahead and take a look at it. The problem with ETFs is tracking errors are significant, and also fees. But I understand. I mean, if you want something that's sort of packaged up and relatively straightforward to trade and to buy, ETFs, yeah, I mean, you can't really beat them, and that's why a lot of people trade them. So this right here, so if we were looking at this IBIT, right, and we'd say, okay, Shane, you're bullish on Bitcoin. I go, yeah, pretty much. How high do you think this thing could go? Honestly, I don't know. Right now we're trading 63.73, okay, and Bitcoin is trading 112, so there's got to be some sort of ratio or a correlation there. I would be watching that relatively closely. If Bitcoin is in fact the only underlying asset of this iShares Bitcoin Trust, then I would be interested. Let's go ahead and see what exactly it is. Brush off market volatility. Okay, what is it? NASDAQ, investment trust, mutual funds, miscellaneous. You can see it's got all this stuff on TradingView. All right. About what is it? The IBIT aims to track the spot price of Bitcoin less expenses and liabilities. It tends to provide accessibility to Bitcoin without the complexities of acquiring, holding, and trading directly. Okay, but the problem is you're trading 63 right here, which is fine. I understand there's going to be a big difference in what it's worth. I have no problem with that, and they're trading 112,000. My question is how does that ratio of 63 to 112 evolve over time? Is that one of those things that ebbs and flows like sort of the gold-silver ratio? Or is it one of those deals where it tracks it exactly, but it's proportional? That's what I would want to know first of all. I don't know the answer to that question. My guess is that the fund managers that launched this ETF said, yes, our tracking is very, very close to what we're doing. It's just proportional. Okay, that's all fine and dandy. What can we really say about it? I would say, number one, if you're looking at this, okay, you want to buy this ETF. Simple. 6082, right? Relatively straightforward. 38%. Really any reason to buy pullbacks and get long. You have to believe in the growth of this ETF if you believe in the growth of Bitcoin. My only question for this ETF is it saturated already? Is the easy money sort of already gone right after the launch, and then the launch and the compression, then the huge breaks? What happens to the price of this ETF when Bitcoin goes to 150 or 175? Do you only get like a $10 gain, something like that? It should be proportional if that's the case, and you just use more leverage, or just allocate more capital to these things. As far as trading not futures, but options on something like this, I could see with the tracking error where you could really run into problems doing that. That's why the options traders are paid so well, the successful ones, because it is hard. It is really hard. Let's see right here. Let's go to Bitcoin. Just curious, monthly chart on Bitcoin. Pretty close. I mean, that's Bitcoin there. I don't know. We can go ahead and do something like this, I guess. So is it the same, you know? It's not quite the same. See this doji formation? What's the first observation you should take away from this? What's the first one as a trader? What's the first observation? Underlying asset? ETF. Now, what the ETFs are going to say, yeah, but you're tracking it, the Bitcoin US dollar. I go, yeah, but you price Bitcoin in US dollars, so I'm not going to argue with that. What's the biggest thing you should take away from this right away? This has rebounded faster than that. And that's your tracking error, and that's something you got to be aware of, or you can lose money and not even intend to lose money. You could have great entries, and still get, oh yeah, Bitcoin popped today. Well, did my ETF move? I ran into problems doing that, trying to trade crude oil through ETFs and inverse ETFs. Eventually just went back to futures. I did it because it was cheaper than trading futures, and I didn't have much money. But I found very quickly that what happened in the oil market was not reflected in the ETF market. Okay. Wow, we got a lot of questions today. All right, we'll spend a few more minutes. Okay, let me see. Oh, yeah, going back to Libo. Is there a way to place the perfect stop loss? We sort of addressed that, but here we go. I ask this because I've been in a trade where I was stopped out, but a doji only for that trade to skyrocket. Yeah, I mean, welcome to the club. Welcome to the club, Libo. You're a trader now. It's happened to all of us. It's happened to everybody I know. It's happened to me a lot. The doji, that's one of the reasons why I sort of use mental stops. When the price gets down to my stop loss area, I'm watching. If it breaks clean, I'm out. If the momentum's there and this thing's trending and it's getting away from me, then I'm out. I cut it off and I'm done. But if the market's really, really slow and it comes down to our stop loss area, and then we get like a daily doji and then the big skyrocket on a key event or something, it's really difficult to stop yourself out right there. And over time, if you trade long enough, or maybe you have been, you start to get used to that type of thing and understand that, maybe I should wait a little bit before cutting these things off. And that's sort of what I've come around to. That's my line of thinking now. Let me see, learning purpose. Good to hear you learning. New name. What is your advice about lot size to be on the safe side? I would look at it just in the standard way everybody looks at it. I would say a percentage of your account size. So if you have $10,000, I'll be looking at a 1 to 3%, of your total account. I know that's not very much. I allow people probably to go to 5%, and I don't chastise them. Anything up over 5%, if you get in the 7s and the 10s, I mean, I appreciate it, and I've been there, and I appreciate your ambition. You just have to be careful and don't lose a bunch. Don't lose a bunch in a row. So what I would say about your lot size, it's got to be a function of your account balance. So you have a $10,000 account, and let's say you want to risk 3% on a given trade. You need to take that 3% and put it onto the product you're trading, and figure out exactly how many lots you can use according to your stop loss, your percent, and the leverage being applied. So that's a really hard thing to do, and it's sort of it's better for me just to show you how to do it. So switch, I said that we had a whole bunch of new tools, and you're going to go right over here. It's going to look a little different for you. I have my screen broken down, but you're going to look for that menu right there. And you're going to go down to accept the cookies, of course. You're going to go down to resources, and you got all these different things here. Resources, learn to trade, EA tools, free journal template, market movers, stocks, cryptos, metals, all this stuff. Free trading tools, view all trading tools, lot size calculator is probably the one you're going to want. Go ahead and give it a click, and this is going to have everything for you. So you're going to choose an instrument, a deposit currency. You got to tell them what you're denominated in, dollars, euros, whatever. Your entry level of your trade, your stop loss level, that's key. That's going to give you really how many ticks or pips you're going to put on there as a stop loss. Your risk tolerance is going to be your percentage. That's how I would think of it, and do that. So let's do a quick one. Let's go euro. Let's see if we can get this. I might not be able to do it live for you here. Yeah, this is going to be a challenge because I got so many apps running. But this thing's a pretty good little resource there. Lot size calculator. Go ahead and go over there and check it out if you're interested over at Switch. And that's absolutely free. We're doing a lot of videos on how to use these things, so could be of use to you if in fact. Sorry, wrong button. All right, let me see. Namaste, sir. Like, done. Absolutely, FX. Good to see you. So I hope that helps learning purpose. Gordon Williams, ETF. Yeah, ETFs are trouble. Let me see, Team Marina. But don't some brokers have a delay in real-time market prices to cause that difference between some spot and futures? Yeah, they do, T. If you're going to be trading ETF and spot and futures and things, you need to make sure that you have live data. I don't even know that if I have live data on iShares. I may not. It doesn't really matter, though. If you take a look at the monthly chart, the monthly chart right there, you're going to see the difference. Take a look at it. That'll show you your tracking error almost every time. So be sure to take a look at those things when you're looking for tracking errors. I would run crude oil. Like I was trading an inverse ETF on crude oil, and I would run the price of crude oil next to the ETF, and it just wasn't very good. It just wasn't very good. It wasn't tracking it. And the ETFs can make a lot of mistakes when they're tracking things. That's how I test it. If that example isn't accurate, don't panic. But that's how I test the tracking errors. Put the charts next to each other. Let's see, but you're absolutely right. Let me see. FX, sir, what is the best risk versus reward ratio in Bitcoin and gold? It's up to what you want to do. I use a 1-to-1 just because I like to win a lot. But if you're an investor, you're going to want 1-to-4s, 1-to-5s, 10x's, 100x's. If you're a short-term trader, most short-term traders are going 1-to-3s, 1-to-4s. I don't do that. I do 1-to-1s, but that's just me. That's pretty much universal, no matter what I'm trading. Let me see, Tina. Where's the video for the lot size calculation? I'm still making it, Tina. I'm sort of behind on the videos. God, I just made one of those. I don't know where that's at. I'll have to look into it. I could have sworn I made it, though. But, yeah, we're going to have to do that. I can show you how, but right now on the live stream it's going to be tough because it's going to be a little bit slow. We could try it, though. Let me just close out all my other applications here. Let's go and try this out. Okay, so you're going to go over to resources. And yours is going to look a little bit different because I do have my screen compressed. So what do we want to do here? Now we want resources. Resources, we want this. Your cursor down to lot size calculator. Give it a look. Okay, so this might take us a minute, but let's just try to see if we can do it. Let's go Euro USD. Okay, right there. Let's go Euro USD. Deposit currency. I'm going to go ahead and deposit in US dollars. Fill in my entry level. Let's say I want to buy 120s. Okay, my stop loss level, let's say it's going to be 119.75. So that's going to be about 25 pips. Let's say I want to go with a percentage of my account. I want to risk 5% of my account, and my account is $10,000. Okay, I plug in all my my constants there. I go ahead and hit calculate, and that's going to give me my position size. 2 lots. My risk amount is going to be $500, and the risk in my balance is going to be 5%. So it really is a great tool. If you're looking to get your position size down, that right there will do it for you. So 2 lots. So what I can do is put 2 standard lots on, and I can get in there and risk 500, and that's going to give me a shot out there. We do have some pretty darn good entry points, though. One thing that if you're trading a short-term gold chart, maybe a 30-minute, maybe a 4-hour, that 920 EMA crossover, probably one that we're going to be visiting, because I think that if our retracement levels don't come into play, we definitely want to get this pullback. So any tool that we have, we can use at our disposal. The 920 could certainly help us do that. All right, guys, this was a marathon live stream. I appreciate everybody for watching. Thank you for all the questions and all the input. Fantastic. If you need anything else, swing by the How to Trade trading room. Send me a private message. And then you just click on my picture. Go in the room, click on my profile, my picture at the top of the screen, and click message, and you can message me. Send me one, and I will get back to you shortly, probably be later today. But I try to get back same day unless it's a Friday or a Saturday. Then you got to typically wait till Monday unless I'm on vacation. If I'm on vacation, then you got to wait till I get back. Absolutely, Antonio. Been my pleasure. Fun session, guys. Watch yourself out there. What's our news cycle? News cycle is very simple. Government shutdowns huge. U.S.-China trade wars, all that's dominating sentiment. We get the government to reopen. Things are going to change a little bit. But the big story today is metals. Also be watching natural gas, a lot of volatility. You're absolutely welcome, Lita. Okay, guys, have a fantastic session. Trade the action well, and we'll talk soon. See ya.